Morning everyone, welcome to another RF crypto video. On today's market, it's red. It's really red and it's really bleeding. The crypto market is down by almost 8%. It now stands at 2.06 trillion in market cap, almost $2 trillion. And it's just insane to think that a few weeks ago we were standing at 2.4 trillion, 2.5, 2.6 trillion in market cap, almost touching $3 trillion. With the crypto market as it is, there was a correction today due to some news that we're going to speak about just now. It is a correction, and I believe that it's going to go up again, but at the moment, everything is quite red. The crypto market has slumped by 8%, and the Nasdaq Composite lost 3.3% over the last 24 hours. So there is a big correlation between the Nasdaq Composites and the price of Bitcoin and cryptocurrencies. Whichever way the Nasdaq moves, the crypto market moves with it because they're both really tech focused. The Nasdaq Composite lost 3.3%, and following that, the crypto market lost about 8%. And these losses in the stock market and in the crypto market in general have been attributed to the US Federal Reserve confirming that it will begin raising interest rates in the coming months, and it spurred concerns over inflation. The Federal Reserve first said that they might raise interest rates in June or July, but in their December meeting, the Federal Reserve December meeting, they stated that actually we're going to start decreasing the size of our balance sheet and we're going to start selling off starting from March. And this caught the whole crypto market by shock because we all expected the Federal Reserve to decrease the interest rates only in June, and now they're going to do it by March. So this caused the markets to go sort of into panic mode, into a selling mode, and that's why we are seeing this redness. There's been a massive sell-off. The price of Bitcoin and the price of the crypto market in general also followed suit by decreasing too. And once Bitcoin fell below 46,000, this led to 800 million in crypto liquidations. And over 87% of losses arose from crypto traders in long positions. What this means is that long positions in futures, which are derivative instruments that follow the price of Bitcoin, if you look at the chart here, there was a red candle, and then when it broke the major support level of 46,000, it just kept on dropping and dropping and dropping. So these two final candles were after the support level was hit, and it's relating to the liquidations taking place in the futures market. So 812 million were liquidated as Bitcoin broke its 46,000 support level, and traders took on 317 million worth of losses on Bitcoin tracked futures alone, with 87% of these positions betting on upward price movements, which are longs. And a drop in Bitcoin prices led to altcoin markets seeing dip cuts as well. Over 200,000 positions were liquidated in the past 24 hours, and the futures on Ether, the native currency of Ethereum, saw over 164 million in liquidations as well. Solana and XRP saw smaller liquidations, but also because there are not so many derivative instruments available and most of the leverage trading takes place on Bitcoin and Ethereum, they saw losses of 18 million and 16 million respectively. And open interest, the total number of unsettled futures or derivatives across the crypto futures fell by 8% after Bitcoin went below 46,000, implying traders exited their positions seeing weakening market conditions. So these leveraged traders, they saw the market tanking, they panicked, and they also exited even at a loss. And open interest, which are active futures, fell by almost 8%. So how it works is if you have $100 and you traded 10x leverage, it's a leverage futures position, you can buy $1,000 worth of Bitcoin futures using $100. If the price goes up, you're making a profit very well. But if the price goes down and your $1,000 goes to $899, your loss is $101. Meanwhile, you only invested $100. So your loss is actually more than what you invested. In that case, the exchange will close your position, you will remain with zero, and that position will be deemed liquidated. And this is how it works. And as I said before, it creates a cascading effect where the price of Bitcoin goes even more down because it's a bearish sentiment. If people are getting liquidated, the market is moving against what people predicted. This is bearish. And despite open interest decreasing, we can see that the leverage ratio is in an all-time high, almost all-time high. It was 0.221, and that little $800 million worth of futures being liquidated caused a little bit of a downward movement, but not much. It's still way higher than what it was before the April crash. If more of these positions start getting liquidated, we can see the price of Bitcoin moving in a very negative territory and worse than this 8%, because if leverage, for example, goes from here to here, we will see a massive decrease in the price of Bitcoin, maybe on the range of 20 to 30%, just because right now the markets are over leveraged. There are too many leverage positions in the market whereby people are trading more than what they have, riskier than before. People are taking more risks. I think it will just be interesting to see how the markets are going to react given that the leverage is so high and when all of this leverage gets liquidated, because leverage has been increasing quite rapidly since April and we don't see a slowdown. Even though there are liquidations, even though the price of Bitcoin falls by so much, we see a massive increase in leverage over this period. Another reason why the price of Bitcoin fell, it was because Kazakhstan's miners' power was down. So due to protests, Kazakhstan's government shut down the nation's access to the internet, which led to many Bitcoin miners going offline earlier today. And this caused the hash rate to drop by over 20%. And given that Kazakhstan accounts for roughly 22% of the global hash rate, the internet outage and the subsequent drop in the hash rate might have caused the price of Bitcoin to go down, because this is a bearish sentiment. A lower hash rate means that transactions take longer to take place, and it means that efficiency of the network is low and the security of the network is lower as well. On other news, Ethereum dominates among developers, but competitors are growing faster. So Ethereum competitors such as Polkadot, Solana, BSC are growing faster in terms of developmental activity, according to crypto research firm Electric Capital. So Polkadot, Solana, Near, BSC, Avalanche, and Terra are growing faster than Ethereum did at similar points in the history. So if you look at this chain, Ethereum is growing quite quickly, but you can see that all of these other ecosystems, Polkadot, Solana, Near, they're growing quite rapidly as well. The report compared the average monthly active developers between December 2020 and December 2021, noting that Solana grew by 4.9 times, Near by 4 times, and Polygon's monthly developers more than doubled. While development growth figures are impressive for a more early stage project, Ethereum is still king. We've been saying this. They have $190 billion in total value locked, which is a lot higher than their closest competitors, Luna, at 20-something billion. The ecosystem continues to retain the largest network of tools, dApps, and protocols, and is 2.8 times larger than its closest rival, Polkadot. So in terms of total value locked, it's still king, and in terms of applications in development, it's still king. Signum valued at $800 million in $90 million funding round. So Signum, which is a digital asset bank and trading platform, and its products include regulated trading of cryptocurrencies, with regulated being the key word. This company was valued at $800 million in a $90 million funding round. Why this is important is because it demonstrates that regulation is not a bad thing. The more regulation there is, normal VC companies and angel investors and institutional investors and even retail investors will be comfortable in investing in cryptocurrency projects such as Signum, and this is one proof of it, that it offers regulated services, and big names such as San Kai and Company, Animoca Brands, and Meta Investments participated in this funding round, and the company is now worth $800 million. And it's just a testament that more regulation is not bad. Proper regulation is good. Obviously, the industry shouldn't be overregulated, but there should be rules and regulations so that there is no anarchy and more money can flow into these products. Despite it seeming contradictory, the more regulation there is, or if I may say it correctly, the more proper regulation there is, and the more solid the framework of this regulation is, the more money will flow into crypto. So a son of a Singapore financier and a son of the family that started Mewa International Inc., an edible oils company in Singapore, have founded ARK, a private NFT-based social networking app that will be open to anyone who owns their NFT. So keyword here is their NFT. They want to create an ARK metaverse where it's filled with products made by them. So for example, now NFTs. They want to connect people from Taipei to South Korea and Australia to network, collaborate on projects, and share stories. Not only do they want to make this into a social networking hub on the metaverse, but also a hub where people can get together and work. And this is more for the Asian markets where the time zones are similar. And obviously it will include Australia and New Zealand because the time zones are similar there as well in Oceania. If you don't own an ARK NFT, you will still be able to participate in their metaverse by paying an annual subscription fee. And this just shows that NFT and the metaverse are gaining a lot of traction into 2022. And this traction will continue to grow and grow and grow because a lot more ecosystems of metaverses are popping up, and it just will be about which one is the better one, which one offers the best services, which one offers the best and most aesthetic NFTs and the most usable NFTs, because now it's a lot about usability and it's about what rewards you can get from these NFTs, because a lot of these networks are now offering rewards for holding and sort of staking the NFTs. So this project is quite interesting because it combines leisure, which is social networking, with work, which is collaboration and meetings on this metaverse. On other NFT news, Australian Open Apes into tennis NFTs and decentralized as well. They're taking a swing at the metaverse with a pair of blockchain-related announcements on Thursday. In this announcement, they said that they'll be releasing a collection of 6,776 NFTs that correspond to minuscule plots on the tournament's court surface, along with a virtual event for the competition. And this is on the metaverse platform Decentraland. So it just goes to show Australian Open is massive. It's one of the 4 Grand Slams in tennis. A lot of money goes into it. And the fact that they chose Decentraland as their metaverse platform shows that Decentraland is still king of the metaverse. Every winning shot from the tournament's 600 matches will correspond to one of the collection's NFTs. Owners will receive an airdrop with footage of the point, virtual wearables, and Australian Open merch according to the press release. So not only are you having that NFT that has value itself, but now you're getting add-ons as well, such as footages, virtual wearables, and merch. They're going to have a Decentraland party which begins in the January 17th, and it will be very interactive because it will include challenges for fans to compete for virtual prizes. This is incredible because this comes at a time when the pandemic continues to thwart many in-person get-togethers, and virtual events like this one will become more commonplace. One other example of such an event is that the owner of One Times Square reportedly threw a New Year's party in Decentraland, attended by metaverse early adopters from around the world. So it's a virtual New Year's party in Decentralized, and it was oversubscribed. It was very, very full. People wanted to get in it. And this will be more commonplace going into the future. A lot of these events, a lot of these big events, like now in tennis, and it will probably spread to golfing and the sport that has the most money, which is football or soccer. Once this happens, the adoption will become exponential and parabolic. It's only a matter of time. And with that, we come to the end of today's video. Thank you for watching. If you like this video, please leave a thumbs up. Please hit the subscribe button, share this video with your friends and family, and I'll see you tomorrow for another one. Cheers and invest wisely.